Hey guys, welcome to another video and thanks for clicking on this one. In this video, I want to share with you something that I came across, and I think we should be aware of this information so that we can actually plan and maybe use this information in deciding how we invest and how we diversify. And that is, I think, the key term that I want you to walk away with from this video. Diversification is key when it comes to investing, especially when the market seems to be approaching a critical point where we don't know where it would head. And that is because we have a lot of factors. One, the government shutdown that we recently came out of, right? We're waiting for some job data, CPI, PPI, all those information that we haven't had in the past couple of weeks to months now are going to get released soon. And those information will determine what the Feds will do, especially as it regards to interest rates. So what does that mean? Well, it means that we need to kind of stay ahead by having some plans in place and also be prepared to make some tough decisions. And what do I mean by tough decisions? Maybe if you need to, rebalance your portfolio, they always say that you do that at least once a year to see where you are in terms of your bonds to your stocks ratio, or maybe to your crypto, or maybe even savings, right? You may need to rebalance things and see what you can buy that is undervalued, and maybe hope that, again, it's all investing. There's always a chance for you to lose money, but all we can do is to hope that whatever we put our money in goes up in value. So here's the thing that I want to share with you that I came across. According to Vanguard, and let me pull it up here. According to Vanguard, they are saying that, let me make sure I can have this here. Let's go back. All right, it says lackluster U.S. stock performance. All right, according to Vanguard, the U.S. stock market is expected to deliver an annualized return of between 3.3% to 5.3% over the next 10 years. That is considerably lower than the previous 10 years. Since 2015, the S&P 500 has delivered an annualized return of 15.26%. In other words, Vanguard's analysts believe future performance won't be nearly as impressive as investors have experienced in recent years, barring sharp drop during COVID. Now, this information was somewhat something that they talked about, I believe, in July's Vanguard's information, or at least article that they put out. And a lot of investors, when I talk about investors, I'm talking about the professionals and analysts and all that. They've also, shared their own insight into what is going on. Well, we are having increase in prices, things are expensive. The real estate market is stagnant. The stock market has just been somewhat, even though in the past 3 months it's gone up in value. If you look at how it's performed in the past 3 months, it's just not been kind of impressive. Let me pull up something here. If I go to, let's do that. It's been a little of a challenge for the stock market to get a sense of direction. I'm pulling up the Dow Jones here. If we do 6 months, it's up about 10.5, which is good. If we do 1 month, it's only up about 2.6. And let's do 1 year, it's only up about 8.6%. So not bad, right? But the worry is, are we in a bubble? Are we actually going to see this trend continue in the next, year to 2 years? Well, according to Vanguard, and as we know, Vanguard is one of the biggest firms out there, financial institution, investment institution, that really puts out good information. Now, I'm not saying that is exactly what will happen, but the point here is we are in a very, difficult stage as we transition into a different environment. Okay. And this transition is taking so long, especially, we've been waiting for interest rates to come down. They've slowly came down, but the Feds would have to make a decision come December in either cutting rates or keeping rates the same. This is going to be a crucial period, especially as we go into next year. Like I said, some decisions would have to be made. If you need to rebalance your portfolio, this may be the time to consider doing some of those. And of course, if everything still looks good and you believe that you are in the right place in terms of your investment, then maybe do nothing, right? There's no point changing it when it's not broken. Remember, a lot of times these analysts will come out with information that may not make any sense, may not even change anything, because they say their own thing, but then the stock market does its own thing, right? Nobody can really predict what is going to happen. Just wanted to share that information with you. Again, if you found value in it, please don't forget to drop a like on it, and I'd love to see you in a future one.